presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Moe.
Hello everyone, I'm Moe Ansari and welcome to the YouTube update for January 8th, 2021. I hope you had a happy new year. I hope all of you are safe. I'm looking forward to this year. I'm going to today talk about the pandemic, give you an update how that's impacting the markets. Politics, a lot changed this past week as far as the political picture is concerned and how that might impact the markets. And then obviously we'll take a look at the language, the technical analysis of the markets. These are my views, these are my observations. Again, if you have questions, you can always call me at the office. By the way, if you would like to get a daily update on the markets, I do a 1-hour radio broadcast every single day. So all of you can tune in. All you have to do is click on the link below and it'll take you to the website or to the iTunes store where you can download the app and get the daily update. If you want to listen to it on your smartphone, just go to the iTunes store. Let's start with a pandemic update. We have two new variants of the virus. Yep, we've got the B1.17. That's the South African UK virus variant, as it's been called. Supposedly, it's much more contagious. It's 50 to 70% more contagious. And then there's another one that's 1.351. That is not here in the United States. So we're looking at this one. It has already been found in multiple countries. It's California, Colorado, Florida, countries and states that it is out there. So where do we go? I think it's the battle between the vaccine and the virus. That's what we're seeing right now. Unfortunately, in the short term, as I've said about 2 weeks ago when I did this last this update, that unfortunately it's going to get worse before it gets better. And it is, unfortunately, getting worse before it gets better. Researchers are currently, they looked at it and they said the Pfizer vaccine does work against the new variant. So as long as you get the vaccine, you're going to be protected. Here's the daily cases in March where we were, and you can see where we are now. It has just gotten, the darker it is, the worse it is. And we're looking at new confirmed cases of about 75,000 plus. As it gets darker and darker, we're up to about 250,000 cases a day, is 250,000 cases a day here in the United States. Unfortunately, yesterday was the deadliest day since the beginning of the virus. We saw that initial surge in April, if you remember. Well, yesterday, more than 4,000 people died of coronavirus. So that's where we are. We are in the holiday surge, whatever you want to call it, after Thanksgiving. We saw it now after the Christmas holidays. We're seeing it again. And it's just a battle to quickly. We do have the vaccines that are out there, but you can see that it started right here and just continued to move to the coast. It started sort of in the middle of the country and it has just continued to move in both directions. And it is now literally everywhere. All you can do is just try and protect yourself as much as possible. If you go in crowds, there's a high probability that there's someone that has it. California, Texas, Florida, but these are also the states that have some of the higher, these are some of the highest cases out there, total cases, total deaths now, as of today, or it was about 366,000. We've got 21.5 million people that have been infected now. Remember, all we have to do is get to 60 to 70 million, 60 to 70 mil to get herd immunity. So we already have 21.5 million people that have been infected. Unfortunately, 366,000. So we only need about another 40 million people to get vaccinated. That'll give us herd immunity. People who've had the virus and they have a long-term immunity. They're saying once you have the virus and you beat the virus, you're okay. And then if you get the vaccine, you'll be okay. So we're looking at these numbers and getting closer and closer to it. Again, vaccine. Now this is the chart that's really how much vaccine is out there and how much has it got into the arms of people. Well, we've already distributed 21.5 million, and about 6 million people have got the vaccine already. That is, we're expecting to have 20 million by the end of December. We're at 6. So we need to accelerate this. And I think as we ramp up the process, we're going to get more and more. Today, President-elect Biden announced that we are going to just give the vaccine, the first shot, to as many people as we can. We're holding half of the vaccine back to give the second shot. Now the President-elect is saying, let's give it to everybody first, and then if the second shot is delayed for a month or two, that's okay. Then we will look at it and try to get as many people the second shot as we get the vaccine in. What it has shown, some of the efficacy has shown that younger people who get the vaccine, it gives them 95% immunity from efficacy from the virus. So even if we can get one shot in the arms of people, I think that's better than nothing. Because right now, unfortunately, the virus is running rampant and just about everybody is getting sick. And unless we get hold of this fairly quickly, in the next couple of 2 or 3 or 4 weeks, 2 or 3 weeks, that's about, I think, the window we have to get the vaccine in as many people as we can. If we do not, then I think we will be in a situation where we'll have to go into a voluntary lockdown, where people just will not go out because they realize if they go out, they get the virus. It will be that prevalent. And that's the thing that most people are worried about at this point in time. This is the good news. We're already at phase 1A. That's where we are. We are already giving the vaccination to healthcare personnel and people in long-term care facilities, residents, and just people, they are the most vulnerable. The next phase is essential workers, and then they're saying phase 1C is going to be adults with high risk, and that's going to be in April. That's what they say that you can. But a lot of people are saying, look, these are the people 65 and older and people who have underlying issues, diabetes, whatever it may be, that those are the people who should get in front of the essential workers. The essential workers, they're out there, but they're 20-year-olds, 25-year-olds, 30-year-olds. They do get the virus. Their mortality rate is very, very low. People over 65, if they get it, their mortality rate is much higher. So there's a lot of talk about moving phase 1C to 1B and 1B going to 1C. And I think with the new virus thing saying get as many shots out there as you possibly can, at least in the first shot, then we might see more and more people that whoever wants to get it, go to your CVS, go to your pharmacy, go to your Walmart and get the shot. But we've got to get the shots there. So if we just need to get it into the arms of people as quickly as possible. On the 21st, I'm going to do a webinar, the first webinar of the year. I know hundreds upon hundreds of you are on those webinars. If you want to attend, just click on the link below to register. All you have to do is to click on it and you can register. But you need to register to get the access code to have the webinar available. It'll be about 2 hours, Thursday, the 21st of January. That's when it is. It is 2 hours. If you would like to attend, all you have to do is click on the link below. I'll go through the economic numbers, take a look at our economy, the global economies, the interest rates, take a look at the charts in detail, and most importantly, answer your questions. So if you have any questions, I'll try to get as many of those as you can live on the webinar that is on the 21st. Again, also, if you would like to get a portfolio review, we had a lot of you call us, get set up for appointment to get the roadmap to get from point A to point B. To see how can I get there instead of chasing this hot stock and that hot stock. All you have to do is click on the link below and you can click and get started. That's all you have to do. And we'll send you, we'll talk to you, send you a roadmap, develop a portfolio with your financial goals. And then you can even set up a Zoom call and I'll spend an hour with you to explain to you what we do and how we do it. All of this is free, but you have to click on the link below if you'd like to get an update. Let's talk about the political situation. It was Tuesday. Every Monday, the markets were nervous. They were down a lot. Tuesday, we popped back up after everybody was looking forward to the election in Georgia. There's a lot of nervousness about that. See which way it goes. And it was a big surprise the way I looked at it. I had looked at it as 1-1. I thought Warnock was going to win, and I thought Perdue was going to win, but it turned out that Warnock and Ossoff both won. That means the Democrats took over the Senate. They won the Senate, and they're going to have a Democratic House, a Democratic Senate, and a Democratic White House. That is what happened on Tuesday. On Wednesday, the market took off to the upside and said, wow, this is going to be great. Wait a minute. Everybody was concerned that if the Democrats win the Senate, the market will go down. Instead, the market took off to the upside. Why? We're looking at a much more bigger stimulus package. As the president-elect said today, it's not only $2,000 per person that they're going to give, but they said it's going to be a package where there'll be more aid for PPP. There might be some infrastructure tied into it, everything into it together. It could be $1 to $2 trillion more. We already did $900 billion. It's already done. Now we're talking another $1 to $2 trillion. That could be very, very stimulative to the economy, fill the hole of the virus until we get to the other side, until we get enough people vaccinated. But once we have that, we think the second half of this year should be very, very good. Everybody's saying, wait a minute, this is just too much money that we're printing, and then we are going to go from there. That was Wednesday. But then on Thursday, we saw these ugly pictures of the Capitol being overtaken by all of these people. Now, whichever side you're on, it doesn't matter, but this is not right. That's what it is. Democracy is what separates us from the rest of the world. It's the rule of law that separates us from all those two-bit dictatorships. And it just looked like one of those pictures where we had people it was trying to overthrow the United States government. And that, I think, was not acceptable. There's a lot of failures in security. We can look at all of that stuff. But it was attack on democracy. And that's, as much as we might disagree with each other, there's no room for violence. You have to talk it out. You have to be, yes, you can be boisterous. It's a First Amendment right. And we had that all during the summer, Black Lives Matter, and people were out there. So you have the right to protest, but you don't have a right to violate not only just other people's rights, but the rights of the country. So that was yesterday. It was a very ugly scene. From there, now we're talking about people saying, hey, we've got to impeach the president. We've got to do this, that. Nothing happens. That's just a lot of political rhetoric. But on the other hand, the president has said that he is now committed to a smooth and peaceful transition of power. That is something that I think is going to be much more calming as far as the effect on the market. Market had a great week. S&P was up this week. The Dow was up. The NASDAQ was up. The small cap was up nearly 6%. That's where we were. Now, looking at the political situation, going back to that a little bit, you hear this is a chart of showing how liberal the senators are. Warren, Booker, Sanders, Gillibrand. These are the most liberal senators, if you want to look at it. Here's the most conservative. Ted Cruz, Paul, and Rand Paul, and Lee. You know, something that you might think that is common here and here, you hear a lot more about these people. Ted Cruz is making all the noise about let's go and take back the Capitol and all of that stuff. And then Bernie Sanders is saying, okay, let's give everybody money on the other end. But we need more of the people here instead of all of these people. But unfortunately, these people are the ones that make the most noise and get the most media attention, and the most radical left-wing and the most radical right-wing people gravitate towards these people. But that's not America. Most of America is here. Maybe it's more liberal, maybe it's more conservative, but they're here. They're not on the extremes. That's what we have to remember. This is the possible rebalancing ideas that we have to look at for 2021. Technology has done well, but you might want to look at lightening up some of that technology and getting into some of the more cyclical stocks. What do I mean by that? If you don't understand tech stocks, Google and Amazon and Facebook, but what are cyclicals, or what is an equal weighted S&P? If you don't understand that, give us a call. We'll be more than happy to explain. You might want to cut back from a little bit on the large cap and start adding some small cap to your portfolio, some mid cap to your portfolio, and definitely emerging markets to your portfolio. As the dollar declines and it hit a new 2.5-year low this week, it is going to bring the value. If you put $10,000 into an emerging market stock, you have to convert those dollars into that currency. If the current dollar goes down 10% and the stock remains the same. Dollar goes down 10%, you gain 10% on your particular investment in that particular stock, emerging market stock. So you get, as the dollar goes down and emerging markets go up, you have a double gain, and the valuation is the best in emerging markets right now compared to everything else. If you're looking at corporate bonds and government bonds, they've done well as interest rates have come down, down, and down. But if inflation, it's not there yet, but if inflation starts to go up, interest yields will go up. For the first time since March, we saw yields go up above 1% for the 10-year. So yields are starting to go up, and the Fed seems to be okay with it for right now. So they don't mind interest rates going up a little bit at this point. That helps that could hurt corporates and U.S. government, and it could help emerging market and high yield. So how do you make these changes or adjustments? Do you do it all at once? Do you do it gradually? What is the right combination for you? That's what you have to figure out. And if you don't know the exact combination that you need in your portfolio, buying this one hot stock and that one hot stock is an exercise in futility. That's not going to create wealth for you. Being in the right stocks over a long period of time is what's going to create wealth. And having the right allocations. What is that for you? Give us a call. Just click on the links that we showed you earlier and just go to compak.com and we will do that free review. Let's take a look at the charts of the markets. I had the 3,800 target. Well, we're above there today now. Now, if we do accelerate above 38.35, that's where resistance is, and we got to about 38.30 today. So if we get above 38.35, the next target becomes 4,000. I mean, just a few months ago, we were at 36 or 3,200, and here we are. We could go as high as 4,000, but this was my target. We've reached it now, the extension. Now we are at resistance. Either the market will break out and accelerate, or maybe pull back. And if we do get a pullback, I would look at it as a buying opportunity. This is the long-term chart, the weekly chart, also projecting towards 4,000. This is wave 1, 2, we're in wave 3. Somewhere we are going to get a wave 4 correction. And that's what say, well, I'm going to wait for the pullback. But as I've said, you've heard me say this for 30 years on the daily broadcast. If you didn't buy 2,500 and you waited for the correction, the market went up to 3,500. Then it corrected back to 3,200. And you bought it at 3,200 on a correction. Did you do the right thing? No. If you didn't buy it at 2,500, you missed the whole thing. There will be pullbacks. There will be corrections. That's where the asset allocation comes in and gives you that shock absorber to help you handle the downside so you can ride the ups and downs and be in the market instead of trying to get out at the top, get in at the bottom, and all of that. Unfortunately, most of the people get in at the top and get out at the bottom, people who try to do that. So that's the Elliott wave chart on the S&P. The NASDAQ also, we were looking at the upside. It's looking on the daily charts, looks like 13,475 to 13,800 is the number we're looking at now. We're just above 13,000 now. On the upside, support is at the 50-day moving average, which is about here. 200 is way down here at this point. The weekly charts, again, are accelerating, and they're looking at a much higher number, a crazy high number for the NASDAQ. But remember, the last part of the bull markets are where the markets go parabolic. They go straight up and they come straight down. But that's where everybody thinks it's easy to make money. I think we're getting closer to that. We're not there. We've got the pandemic. We've got a lot of people unemployed. We've got a lot of slack in the economy. But once we get the vaccine in the arms of 50, 60, 70 million people, everybody will be out. We've got about 1 to 2 trillion of savings. We've got about 5, 6 trillion of money that has been pumped into the economy. And I think everybody will be out. Profits will go up. When profits go up, the market goes up. Gold market came down big today, which was a surprise. Everybody said, wait a minute, why did the gold market come down $60 today? Hit the 50-day moving average, 1839, managed to close around, 1839, closed above at 1849, just popped off the 200-day. Everybody said, why did gold go down? It's supposed to go up with all the political uncertainty we were seeing. And, well, everybody said, well, the Democrats took over. They're going to print a lot more money. That should be bullish for gold market. That should be inflationary. One thing happened this week, interest rates went up. When interest rates go up, the dollar goes up, and that puts downward pressure on the gold market. So that is why the gold market was down, interest rates were up, and it competes with gold, bonds do, as a safe haven. Gold, as you know, does not give anymore, give you some return, but bonds do. Same thing with the emerging markets. 2 weeks ago, I had drawn this line and said, look, if you break out above it, we take off. Well, we gapped above it and took off to the upside this week, a huge week for emerging markets. I've talked about this for the last couple of weeks, where I think the last few months, where we have looked at the portfolios, looked at adding emerging markets to our portfolios. I think that is going to be a much good play for this year. Another one that we've looked at is small cap and small cap value. That's another area that I particularly like. You can see that we've gone sideways for a number of years, and then we broke out just about here. This was much slower than the S&P and the NASDAQ, but the Russell Small Cap Index is now breaking out. Again, this week it was up nearly 6%. S&P is up 1.5%. So I think the Russell is looking a lot better. Be sure to subscribe and click. When you subscribe, make sure you click the bell to get notified for the next video. Whenever I do that, you will be notified if you click that bell. So you will get all the updates as I do them on a weekly basis. And don't forget, for your review, if you'd like to do that, just go to compak.com, click on Get Started, or on the link below, and you can go ahead and get a free review of your portfolio. That is the update. Thank you for joining me. Happy New Year. I will be back next week. Until then, good trading.
This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indexes through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors, because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.